the CME Group. Tim Haefke from Top Notch Trading here today on Monday, April 8th. Well, Top Notch Trading is a little bit miffed about what's going on. All last week, the data that's coming into the market, is showing weakness. I mean, jobless claims, the non-manufacturing ISM index, and then Friday comes out and you see how far off those guys missed that unemployment data. And what happens? The S&P and the NASDAQ decide to rally. Last week we saw the bonds on the regular session make a 144 even low, and by Friday they make a high of 148.09. You would think that the treasuries would soften up these indexes and look for a correction. The markets are in a little bit of trouble as far as I'm concerned on one side of the coin, because a fundamental structure of this move isn't healthy unless we get a decent correction out of these S&Ps and the other indexes. And without one, we can't survive on printing money. Fundamentally, the levels are coming out that are warning us that things are no good, but yet the resiliency in the stock market continues to show its face. Whether you're bearish or whether you're bullish, on a day-to-day basis, you have to take what the market gives you. And it's been tough. I mean, I'm even having trouble deciding what to do. It wasn't just 3 or 4 weeks ago, and I said, why can't the S&P get up to all-time highs? And then last week, they do make a new contract high on Monday, 1568 even. And then on this data on Friday, a 2-week low, which is now is a 3-week low at 1532 even, they can't even get underneath that. Are we range bound? So to speak, yes. So as the trend continues, it's just a day-to-day situation that I'm seeing it. So Top Notch always comes out and say, this is what the market is telling me to tell you people. And now it's telling me I got to keep my hands folded like this. Every time you get yourself into the market situation and you put on a trade, you're putting yourself at risk. The whole idea now is to hit singles and doubles. And you got to take that money out of the market, because the overall picture, I'm telling you, those locals and a lot of people, in my eyes, had to be short that unemployment data, on Friday, and they just wrote it in disbelief. You should have seen some of the faces. Even my mind, I'm going, how come they can't break? How come they can't break? It remains to be seen. Look at right now, I was looking for 148.16 for a bond top. They got up to 148.09 on Friday. I want to see it get there one more time for a shot at seeing if they find resistance there. But up the ladder, these things look like they're heading for 149.29 if they continue to gather momentum. Last week, they opened on Globex at like a 144.15, the next day at 145.12, the next day at 146.10, and where they opened last night, if I believe at 147.26, they're opening a full point higher every Globex session after the close. Come on. And now they can't break these indexes. I can't say any more. 1 point of interest, though, on the downside still remains at 1522.60 for the S&P. I doubt if we're going to get there. Upside, like I said, 86.5, big contract, 86.75, all-time high. If you take the highs from 2000, the high from 2007, you draw a trend line, it's getting up to about 95 if you decide to make all-time highs and get up there. Have a good week.